Hello, ladies and gentlemen. Good morning. How are you all doing this morning? And hope you all had a wonderful night rest. I hope you are pumped up and ready for another trading day. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the session started. Thank you as you do so. I really need to see some feedback so that I can confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, type in hi in the comment section, please. So let's see what we have here in the comment section. Ericksons, good morning to you. Jota7, good morning. 999, I see you. 959, good morning. Hey Vivi, how are you doing this morning? Gatita, good morning to you, thank you. Raven Crow, good morning. Mayora, good morning to you as well. Hey Carrie, good morning to you. Glad to have you around. Mayora, I'm fine, thank you, and trust you're doing well. Okay. Alright, I will be taking this as a positive confirmation that we are good to go this morning. On this note, I welcome you to another promising session on the X-Trend Speed Live. My name is Sheriff Daramola, and as usual, I will be your host for the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you're welcome on board. I'm glad to have you guys around. And what we simply do here on a daily basis is to gather as a community, and we normally have pairs and commodities financial instrument that we have been monitoring since the beginning of the week. So what we do here is to review how well these pairs have been doing and then get ourselves prepared for the New York session. And if you do have pairs you want us to look at on Monday mornings, it's always the most appropriate time to drop in the pairs that you want us to monitor for the week. Well, at first it always looks as if it is complicated. That is, you might try to find a way around understanding how this works, but I assure you it will take some time. Just be patient. Be with us throughout to the end of the session and join us on a daily basis, and I assure you with time you get to understand how this works. So once again, I welcome you all, and let's get started at this point. So as usual, the first thing we are going to be doing is to get ourselves set for the day by checking the economic calendar. And in fact, we have a high impact event coming up today, and that is the First Chairman Powell, who is going to be testifying before the Senate Banking Committee, and that is going to be happening in the next 4 hours. So everyone in the market is looking forward to this event. We want to see what his opinions are regarding the U.S. economy, and he has been projecting an expectation of job unemployment. The increase in unemployment will drop the inflation rate in the country, and so we still want to see if he still holds on to this stance. And one of the major questions that will be answered today is whether the impact of the monetary policy is just delayed the economy, or whether the current economy needs even tighter monetary policy. So these are things we are going to be looking out for in this testification before the banking committee. But be rest assured that I will be giving you an update in that regard tomorrow as we continue to monitor price action. So that's the only major event we have for today. And in that regard, let's dive into the current market structure. Now, the first commodity we are going to be looking at this morning, as usual, is the US oil. And on the US oil, we have been profitable so far this week on the US oil. And let's do a quick review of what our expectations were during the live session yesterday? Well, during the live session yesterday, we had this channel identified between the $79.40 level, which was serving as a resistance point of the channel at the beginning of the week, as we saw selling pressure from that area. Then we have the support level of the channel sitting at the $79 area. And you all know what we look out for whenever we have this kind of channel. Of course, we look out for either a breakout of the channel for trading buying opportunity or a breakdown of the channel for selling opportunity. And in fact, during the live session yesterday, we had the breakdown of the $79 area, and I told you all to move your stop loss for those who are taking advantage of that move, to move your stop loss to break even or lock in some profit just in case price action does some reversals around this area. And I also stated here that we shall be using the bearish trend line here that we were able to identify after connecting the series of lower highs since the beginning of this week as a yardstick for trading activity. And what we simply said is that if price action continue to trade below that trend line, we shall be looking out for more trading opportunities to the downside. But if price action breaks out of that trend line, then this will definitely be a signal that a momentum shift is gradually coming in, as the bearish trend line may no longer be strong enough to hold that selling momentum. And this was exactly what happened during the, I think 4 hours into the New York session yesterday. We finally saw the breakout of the trend line to signal a possible bullish momentum. And since we have our buy stop order sitting above the $79.40 area, we had a buy position triggered during the New York session yesterday. And if you had your buy position triggered at the $79.40 level, well done to you for being on standby to catch that move. And if you're still in the position right now, you will be running with over 100 pips in profit. Then in addition to that current structure, I was able to identify another level at the $80 area where we said another breakout of that level will also welcome additional position to our existing trade. Remember, that structure has been a strong selling niche in the past, and we said if price action breaks out of that level, it will be a beautiful opportunity to add more position. And if you are joined that move as well, you will currently be running with about 62 pips in profit on that second position. So with a total of over 160 pips in profit with 2 positions running at this point, well done to everyone who had been part of this current situation. And for those who had missed out on this opportunity, well, that is why we are here today. We are going to be taking a technical dissection of the current market structure using technical parameters to identify if we have another opportunity to add more position to our existing trade, or we might be getting ready for a decline to the downside. So these are the things we are going to be looking at today. And before we go into the details, it is appropriate that we scale up into the daily time frame to really see what is really going on from an holistic point of view. And for those who had missed out on the live session yesterday, to be on the same page with us here. So the next thing we are going to be doing right now is to scale up into the daily time frame so that we can have a quick technical perspective into what has been going on from the higher time frame. Now, looking at the structure we have on the higher time frame here, like I said yesterday, it is very, very obvious that price action has been bearish. And to further emphasize the strength of the sellers in this particular market, we have connected the series of lower highs since the month of July last year, and as a result of this, we have this bearish trend line figured out in that regard. However, if we zoom into what has been happening during the last quarter of last year, you will see how price action has been caught within a channel, and this further emphasizes the indecision in this market as price continue to range between the $83 area and the $70 area in the last 4 to 5 months. And with the situation we have here, we could see that buyers are trying as much as possible to spring out of this position and to further give us a clue into the attempt by the buyers here. We have a higher low structure, and when we connect the series of higher lows here, we can see that we have a bullish trend line to further emphasize the strength of the buyers in this area. However, we can see that through every attempt by the buyers to break out of the $83 level has been negated by sellers. As a result of that, we also have a supply zone here to further emphasize that there is an indecision in this market. Well, since the beginning of beginning of last month, we have been anticipating that the opening up of the Chinese economy will probably bring some demand for the US oil in this market, and it appears nothing of such has been happening in this market until during the course of last week's trading session. And it was recorded that we have a 102 million barrel per day production so far this year on a daily basis, which is quite enormous if we compare what the figures are with what we had last year. And as a result of this, there is a likelihood that the demand for the oil will gradually start coming in as time goes by. And we're beginning to see that impact during the course of last week's trading session, as we were able to take advantage of this bullish move that broke out of the $76 area and in fact did a retest of that structure to the upside. And during the course of last week, we saw price close the week right below the $80 level. And during our live session yesterday, we said that we need to understand what is really going on around the $80 area to decide what our next line of action will be. And considering the fact that the $80 level has also been a major determinant of price action in the past, it has been a strong selling niche in the past, we want to see a breakout of that structure on our lower time frame to give us further confirmation that we might be seeing a bullish momentum to the upside. Now, in that regard, we want to be scaling down into the 1 hour time frame to see how participants in this market has been reacting to the $80 level since the beginning of this week. Then we shall be using the structure we identified on the 1 hour time frame to decide what our next line of action will be. Now, when you look at the 1 hour time frame, so I will be scaling down into the 1 hour time frame and looking at the $80 level. We saw the first breakout of the $80 level happen in a long time. And with the situation we have here, we saw the breakout of the $80 level, which triggered our second position for this week. And since then, price action has been trading above that key level. Now, with the $80 level mapped out, how do we intend to take advantage of trading opportunities today? Are we going to be buying the US oil? That is, are we going to be adding more buy position to our existing trade? Or are we going to be getting ready to sell the US oil? Now, in order to have a better perspective into the current structure, I was able to connect the series of higher lows here. As you can see, since last week, price action has been finding higher lows. And if we look at what has been happening here on the last trading day of last week, we saw the low here. And when we connect the series of higher lows, this is what I was able to identify, a beautiful bullish trend line. And this will be a yardstick for our trading activity going forward from this current structure. And what does this simply mean? Well, the bullish trend line here will guide our trading activity in the sense that if price action continues to remain above that bullish trend line, we shall feel comfortable in our buy position. However, if price action drops below the trend line, breaches the trend line, that is breaking down the trend line, then we might be anticipating a momentum shift in that regard. So how do we intend using this to guide more trading or more buying opportunities in this market? Well, look at what we have here. Since the early hours of today, we saw that as soon as price got into that strong psychological level at the $81 area, we started seeing certain pressure resume within that area. And since then, price action appeared to have been caught within the channel between the $81 area and let's say the $80.40 or 50-cent area, because I would like to readjust this support line to fit into this current structure. So if we do that, we should be having something like the $80.40 area. So let me quickly do some readjustments in that regard. So we have the $80.40. So since price tested the $81 area here, we have been seeing something like a consolidation phase, which further emphasize the strength, the indecision in this market. However, since price action is still trading above that bullish trend line, we are still hoping for more buying opportunity. Now, for those who had missed out on this opportunity, let's hope that price action will be breaking out of the resistance point here, which has been negating buying attempt here. And if this happens, we want to be adding more position to our existing trade. That is, if you are still in this trade, we want to be adding more position. And if you didn't take advantage of this opportunity that we have, well, this will be an opportunity to join that trend continuation to the upside. And if it so happens that price action does a retest of the $81 level, which, as you can see, also shares a confluence with this bullish trend line, it will be another opportunity to add more position to the buy position that we have here. Now, in that regard, we shall be having our buy stop order right above the $81 area with the hopes that price will break out of that structure. Now, in as much as we continue to look out for bullish momentum in this market, it's always our culture to keep our mind open for other possibilities to happen in this market. And in that regard, like I said, we are going to be using this bullish trend line as a yardstick for trading activity for today. So as long as price remain above that structure, we'll remain comfortable in our buy position. However, if this bullish trend line is breached, that is, price action breaks down that bullish trend line, then this will be a signal that we might be anticipating a momentum shift. And if that is going to be happening, we are not going to be placing a sell stop order right away on this one, as we need some further confirmations to happen, and which will likely come in the form of a retest of structure. Now, if a retest of structure happens with selling pressure below the structure in our lower time frame, well, at this point, a sell stop order below the $80 level will be a beautiful opportunity to join that decline to the downside. And to further support the possibilities of a selling momentum in this market, first of all, we need to look at the selling pressure that has resumed below the $181 area. That is one. Then two, we can see that the bearish trend line we identified during the live session yesterday was broken to the upside yesterday to give us a strong bullish signal. And you all know from a technical standpoint, whenever we have a breakout of a significant structure like this, there is a likelihood that price action will come back to do a retest of that structure in anticipation of another wave of bullish momentum. Now, these are the things we are going to be looking forward to. So if the price action breaks down the $80 level, then we can be considering selling below that structure as we look forward to TP target somewhere within the $79 area and the $78.30 area. So this is what we are looking out for today. So on the US oil, let's have our buy stop order sitting above the $81 level with the hopes that the bullish momentum here will continue. And for those who are already in this buy position since yesterday, kindly move your stop loss to somewhere right above or around the $80 level to secure the current buy position, as we look forward to see if our price action will be reacting to this bullish trend line to decide if we are going to be joining a sell momentum from this area, or we shall remain positive with our bullish position in this market. So these are my views here on the US oil. If you have any questions, feel free to drop your inquiries in the comment section. And to make things easy for you during the New York session today, you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the US oil. All right, so in that regard, let's move on to the next option. So the next option we are going to be looking at this morning is the US tech. Now, on the US tech, things has been quite choppy in the last 24 hours here. And let's quickly run through what our expectations were as at yesterday's live session before we jump into what our expectations are for today. Well, the first thing we observed on the 1 hour time frame, after identifying that holistic point of view on the daily time frame, we saw that since the beginning of this week, price action fell within a consolidation phase between the 12,350, which happened to be the highest point prior to the live session yesterday, and we had a support level of the channel sitting at around the 12,260 level. So with a consolidation phase within this area during our live session yesterday, we anticipated trading opportunity at either a breakout of the channel or breakdown of the channel. And to further support this idea, we were able to identify a bullish trend line which we said will be serving as a yardstick for trading activity for this week. And after connecting the series of higher lows here since last week, we had this beautiful bullish trend line to serve as our yardstick. And what this simply means is that if price action continue to trade above that bullish trend line, we shall feel comfortable in our bullish momentum. But if a breakdown happens, like I said, we'll be looking at selling opportunity in that regard. Now look at what happened here during the New York session yesterday. We finally saw the breakout of the 12,350 level, which triggered our buy stop order right above that level. And with the buy stop triggered here, we saw our price move significantly in our favor. In fact, it moved about 110 pips thereabout before this bearish momentum happened. And I also told you yesterday that as soon as price break out of the 12,400 level as well, we want to be adding more position to our existing trade. And in fact, from that same level too as well, price action moved about 65 pips before the bearish momentum started in this market. And I hope you moved your stop loss accordingly as price action moved in our favor, as in this community we always ensure that we move our stop loss accordingly as soon as price moves significantly well in our favor. And if you did that, price action would have taken you out with some small profit, and in worst case scenario probably at a break even. And this situation, the sell pressure we saw here, led into a situation where price action broke down that bullish trend line for the first time this in the last 3 to 4 days now. Now, with the situation we have here breaking down that trend line, some also will have taken advantage of this selling opportunity below the 12,350. And if you are taking advantage of that, well, kudos to you. It's not bad at all for taking advantage of that move. And price action is still currently trading below the 12,350. So at this point, if you are in a sell position on this one, kindly move your stop loss to break even here while we scale up into the daily time frame. Well, we have a very sensitive structure here, which I need us to understand how we got to this point so that we can be able to digest what I will be explaining to you in a couple of moments. Now, the first thing we are going to be doing is to have an holistic point of view. What has really been going on in this market since last year, since the beginning of this year? Let's see. Now, on the daily time frame, well, the first thing we observe, let me zoom out quickly for the sake of those who are not part of the live session yesterday. We realized that price action has been bearish. In fact, throughout the course of last year, we saw our participants in this market continue to sell the US tech, and as a result of that, we had lower highs. And when we connect the series of lower highs here, this is what we were able to find: a beautiful bearish trend line which has been guiding our trading activity throughout the course of last year. However, things became a little bit interesting in the month of June / the month of July, as we saw how the $11,000 level buyers gathered here to negate all attempt by the sellers to break down that structure. So participants in this market saw the US tech as very cheap enough to buy around this area. And at the beginning of this year, we saw our price action broke out of the $11,000 level, not only breaking out of the $11,000, but went to as far as breaching the bearish trend line that has been holding certain pressure since the beginning of last year, to further emphasize that this trend line may no longer be strong enough to hold selling momentum. And as a result of the breakout of this structure, we saw our price action continue to find higher highs and higher lows, breaking out structures like the $12,000 level, the $12,300 level, and then culminating at the 12,900. And as soon as price got into that 12,900 area, we begin to see selling pressure, which finally transitioned into a reversal pattern in the form of a double top structure. And with a double top structure, you all know that this is a strong reversal pattern from a technical perspective, and this reversal pattern will only be mature if a breakdown of the neckline of that reversal pattern happened. And with that, we identified a neckline at the 12,300 where a breakdown happened a couple of weeks ago, and thank goodness we were lucky enough to be part of that position as we rode the move all the way into the $12,000 area. Now, with the situation of things right now, during the course of last week, we saw this consolidation phase around the 12,000 area. Buy pressure resume around the 12,000 area. We saw last week closed with an engulfing candle, which we are lucky enough to take advantage of. And this week started at around the $12,300 area, which happens to be the neckline of that reversal pattern that we identified earlier. Now, you all know what we expect from a technical standpoint whenever we have the neckline of a reversal pattern breached. Now, if a neckline of a reversal pattern is breached, we expect that after a breakdown, there is a likelihood that price action will come back to do a retest of the neckline area. And if the appearance of sudden pressure around or below the neckline happens on our lower time frame, we definitely want to be joining a decline to the downside. And look at what has been happening here since the beginning of the week. We can see our participants in this market are still trading around the 12,300 level. To further emphasize, there is an indecision in that particular space. Now, we are looking forward to a high impact event coming up today, which I showed you earlier today. And this is more or less a sign that participants are looking forward to this event. And hereby, major players have stepped aside from this market, bringing low liquidity into this market, waiting for a sign of where price action will be going. And we also want to be patient too as well, so that we can position ourselves in such a way that we are right there when price action moves either way. Now, if we look at the candle that closed yesterday, you will see that this candle closed in the form of a shooting star candle, which from a technical standpoint is a sign that there are traces of sellers in this particular area. So going into the New York session today, we need to take into consideration the possibilities of a selling momentum coming in around this area. Now, in that regard, we want to understand what is really going on around the 12,300, and we want to be scaling down to our lower time frame to see how price action has been reacting to the structure since the beginning of the week. But before I scale down into the lower time frame, I want to quickly share with you from an holistic point of view here on the daily time frame what might likely happen. So let's have some projection here. So the first projection, which is looking very possible here based on the current structure around the 12,300, is the possibilities of a selling momentum beginning from this area to push price to the downside, to continue that trend continuation to the downside. However, in as much as the sell momentum is looking very possible here, we cannot ignore the possibilities that buyers could take over this market if we consider this engulfing candle that brought price back into the 12,300. So what this simply means is that we might likely see a situation where this consolidation phase we saw here since the beginning of the week could transition into a trend continuation pattern on our lower time frame to trigger a breakout retest of structure to emphasize the strength of the buyers here. So these are the things we are going to be looking forward to. So in order to have a better perspective into this structure here, we want to be scaling down to a much more lower time frame. And in that regard, we shall be moving back down into our 1 hour time frame. Now back into the 1 hour time frame, what can we see that is going on here? Well, first of all, I want us to look at what has been happening since the beginning of this week. That is the channel here. And if we look at the structure, we saw our participants in this market broke out of that resistance point, which we identified at the 12,350. Price action dropping back into that zone. And since price action dropped into the zone, what did we see here? We saw some buy pressure resume. Price action appeared to have transitioned into a structure here that looks more like a reversal pattern in the form of a double bottom structure. And if this is going to be happening here, whenever we have a double bottom structure like this, the next thing we want to be doing is to identify the neckline of that structure, which appears to and coincidentally fall within the 12,350 level, which happened to be the resistance point we identified at the beginning of the week. Now, with the situation we have here, and following our technical expectations on this chart, we might likely see price action break out, retest the 12,350 for a buy opportunity. Now, with this situation here, we need to be very, very careful considering the fact that we have this strong bearish signal here yesterday. And that is so how do we remain patient and careful here? Well, we want to see price action break out of the 12,350. First of all, we are not having a buy stop order here yet. We want to see price action break out of that structure first of all. Then we want to see some confirmation that buyers are still strong in this market. And this is likely going to come in the form of a retest of the 12,350 or this bullish trend line here, which as price action has been respecting since the beginning of this week. You can see after connecting the series of higher lows here since the beginning of this week, price action appeared to be bullish. So we have a bullish trend line to further emphasize the strength of the buyers at this point. So I want to see a breakout of the structure first of all, then price action coming back to do a retest of the structure. It could be the retest of the 12,350 or the retest of the bullish trend line here. But one way or the other, the most important thing we want to be seeing is buy pressure around this area following the breakout of that neckline to give us a beautiful opportunity to join the rally to the upside. And if this happens and a further breakout of the $12,400 level, will definitely welcome additional position to our existing trade. So this is my view here on my expectation of a bullish momentum in this particular market. However, in as much as we continue to look out for bullish momentum here, we should not ignore the possibility that sellers could come in. Remember, on our daily time frame, we identified a reversal pattern. We had a neckline around the 12,300 level, where we said if we start seeing selling pressure below the 12,300, we might be seeing our price action respect the neckline to incite a bearish momentum to the downside. So because of this also, we want to take into consideration that possibility as well. So please follow me attentively on this one. For the buying opportunity, let me restate this, please. For buying opportunity, we want to see a breakout, price action retesting that structure to give us a confirmation to join that rally to the upside. Now, for selling expectations in this market, I want us to look at what has been happening here since last week. Now, if we zoom out of the structure and look at the impulsive move that started on Thursday last week, taking that into consideration, you will see that a retracement appears to be long overdue in this market. And if we look at the consolidation phase around this area, since price action got into the structure between the 12,350 and the 12,400, you will see how price action appear to be transitioning into a strong reversal pattern in the form of a head and shoulder pattern. Now look at the shoulder here. That's the right shoulder, sorry, the left shoulder. Then we have the head here. Price action drops back into the neckline. We have the right shoulder here. Price is yet to break above the 12,350, which I said if a breakout of the 12,350 happens, we want to be looking out for buying opportunity. And the situation we have here, price is back into the 12,315. So the bullish trend line we identified earlier is turning out to be the neckline of this potential reversal pattern, which is coming in the form of a head and shoulder pattern. Now, for this head and shoulder pattern to be mature, we need further confirmations to happen here, which is the breakdown of the neckline. And if you look at the neckline here, it also shares a beautiful confluence with that bullish trend line. So we want to see price action breaking down the $12,315 level, selling pressure below the structure on our lower time frame to give us a beautiful confirmation to join a sell-off in this market. So this is the only thing that could be happening in this market that would make us to sell the US tech for today. We want to see a breakdown of that $12,315 level, which I said shares a confluence with that bullish trend line, which is serving as the neckline of our head and shoulder pattern on this structure. So I hope I made myself clear here. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So let's see how this plays out in the next 24 hours. If you have any questions, feel free to drop your inquiries in the comment section below. So I will be moving on to the next pair here because of time. I want to make sure, because we are looking at 6 pairs for this week, I guess, and we need to finish it before time. Now, if you have questions, just drop it in the comment section. I will be checking it from time to time. All right, so the next pair we are going to be looking at this morning is the GBPUSD. And what do we have on the GBPUSD? Well, if we look at the current structure we have on the 1 hour time frame, this is what we were able to identify during the early hours of yesterday. So we saw the situation here where price action was consolidating between the 1.20500 level and the 1.20250 area. And we saw the breakdown of the structure, which we were lucky enough to take advantage of during the live session. Price action moved about, how many pips was that? Moves about 30 pips before this bullish momentum began again. Then, we had our stop loss right above the resistance level at the 1.20500 level. Price action came back, took us out of the sell position. We had another trigger here, and we were actually taking out sell stop. Our stop loss were triggered here, taking us out in a loss in this one. And one thing about this current structure is the fact that price has been quite choppy since the beginning of the week. As we can see, a consolidation phase has gotten wider as it extends into the 1.200 level, as you can see here. Now, coupled with this structure here is that bullish trend line that we identified at the beginning of the week, which runs from Thursday's trading session into the present moment after connecting the series of higher low. Now, another thing I would like to share with you here, especially for those who are not part of the live session, so that you can have a better perspective into what we are talking about here. So to show you that, I will need to scale up into the 4 hours time frame. Now, if we look at what has been happening here in the last couple of weeks, you will see that price action has been bearish. And to further emphasize the strength of the sellers in this market, we have a beautiful descending channel to confirm the bearish momentum in this market. However, when we look at what has been happening here in the last 4, 5, 6 weeks, you will see that as soon as price got into the demand zone at the 1.19500 level, we have been witnessing buy pressure resume from that area, hereby negating all attempt by the sellers to break down that structure. And if we zoom into the last time price action tested the support line of that descending channel, it was here mid-month of February. And since then, price is yet to come back into that support line, to further emphasize that we might be seeing a momentum shifting away from that support line into the resistant line of that ascending channel, where a breakout of the resistant line will further confirm the strength of the buyers here. However, if we zoom into what is happening since last week, you will see that following the bullish momentum that triggered out of that strong demand zone we identified earlier, we have a bullish trend. We have an impulsive move to the upside. And since price tested the 1.20500, we have been caught within a huge consolidation phase, which is as a result of the anticipation of a macroeconomic event. Now, what we are looking forward to, like I said earlier, we are still waiting for, we know that the Fed chairman is going to be testifying in front of the Congress today, and the outcome of that will be bringing some clearance into this current structure. So whenever we have this kind of structure, we all know that we shall be waiting for either a breakout of the 1.20500 level to give us buying opportunity here, or a breakdown of the 1.200 level to give us selling opportunity in this market. But are we going to wait for the breakdown to happen after considering the continued selling pressure that has been appearing around the 1.20500 level since the beginning of the week? So we shall be seeing things more clearly here if we scale down to the 1 hour time frame. And right here on the 1 hour time frame, this is what I was able to identify here. I actually shared this on my public platform this morning, where we saw the sharp rejection of the 1.20500 level during the early hours of today. and in fact we have a candle that closed in the form of a shooting star, and which from a technical standpoint, this is a strong signal that sellers are still very strong in this market. And one thing I said here is that if this bullish trend line that we have here will be our yardstick for trading activity for this week, if this bullish trend line is breached to the downside, breakdown retest of that structure will definitely be welcoming a sell position in this market. Now, what we have seen here in the last couple of hours was quite interesting. As we saw the breakdown of that structure, price action came back to do a retest of the 1.20360 on our lower time frame, and this triggered the sell stop order sitting below the 1.20250 level. And for those who are taking advantage of this move right here, kudos to you for being on standby, as you will currently be running with about 17-20 pips thereabout at this current moment. Now, with the current situation we have here, I will be advising you to move your stop loss to secure this current position by moving your stop loss to your entry point, or you reduce your stop loss to somewhere around the 1.20360 level, whichever one suits you, as we continue to see buy pressure resume around the 1.200 level. Now, as you can see, since last week, we can see our bullish momentum has gradually crept in this market as soon as price action gets into the 1.200 area. Now, with the situation we have here, to further confirm the sell position that we are in right now, to further confirm that sellers are still strong in this market, we need a breakdown of the 1.200 level to do a confirmation for us. So what we simply want to be seeing is a breakdown retest of the 1.200 level to further welcome an additional sell position in this market. But if it so happens that price action finds it difficult to break down the 1.200 level, then this will be a beautiful sign that buyers are very strong in this market. Then we want to be anticipating a buy opportunity. Now, to buy the GBPUSD, we can only buy the GBPUSD if price action breaks out of the 1.2002050 level. And the reason why that is simply because of the fact that we have been witnessing selling pressure around this area since the beginning of the week. We definitely want to see price action take out all the sell position at the 1.20500 level to give us a confirmation that buyers have come to stay. And this will only happen if a breakout of that structure happens. So we have a buy stop order trigger there. And if price action comes back to do a retest of the structure followed by buying pressure on our lower time frame, it will be a beautiful opportunity to add more position to our existing trade. So if you're having a buy stop order above the 1.20500 level, I hope you will have a portfolio that can support a stop loss somewhere around the 1.20100 level, somewhere around there, which will be giving about 40-45 pips thereabout as a stop loss. So let's see how price action plays out going into the New York session today. So remember, we have a structure that will be guiding our trading activity, and the major one here is the bullish trend line. So what this simply means is that if price action continues to trade above that bullish trend line, we shall feel comfortable in our buy position. However, if price action continues to trade below the structure, like we already have a sell stop order triggered here, we'll remain comfortable in our sell position, as we still have a likelihood that price could come back, do a retest of structure before another wave of bearish momentum will be happening here. So let's see how price action plays out. May screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So let's see how price action plays out here, and we shall be coming back tomorrow to review how well this pair has been doing so far. If you have any questions, feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we shall be looking at today is the XAUUSD, of course. And on the XAUUSD, we I remember during the live session yesterday, we had a sell position triggered where we said a retest of that structure will definitely welcome additional position to our existing trade. Now let's quickly run through this current structure. Now, since the beginning of the week, we saw our price was caught within a channel that is between the 1,857 level and the 1,850 area. And this was an indecision in this market, obviously. And we were looking forward to either a breakout of the channel for buy opportunity or a breakdown of the 1,850 for selling opportunities. Now, look at what happened here. We saw the breakdown. If you had missed this one, price action actually came back to do a retest of structure. In fact, we had multiple retests of the structure, which lasted about 6 to 7 hours before price action dropped to the downside. So you must have had two positions running at the breakdown retest of the 1,850 as price action continued to drop to the downside. And if you remember what I said, if you recall vividly what I said about the 1,845 level here, I told you that as soon as price gets into the structure or tests the structure, we want to be moving our stop loss accordingly to secure the current sell position, as we want to see how price action will be reacting to the 1,845 level to decide if we are going to be buying or selling the XAUUSD. And to further understand the importance of the neckline area at the 1,845, it is very, very important that I scale up into the higher time frame, where the importance of the 1,845 level will be very, very clear. Now, on the 4 hours time frame here, it's quite obvious that we realize that price action has been bearish on this chart. As you can see, throughout the course of last month's trading session, price action had continued to find lower lows and lower highs to further emphasize the strength of the sellers in this particular market. However, something interesting happened during in the last 3 weeks in this market, and we were able to connect the series of lower highs here to give us this bearish trend line. In fact, we have a couple of trend lines here. We have the first one here, which is the major one, and we also have another one here which was broken last week, which triggered our buy position last week here, which gave us about 7,000 pips in profit. Now, we took into consideration the situation as price action remained above this demand zone. This was where the new year started. Price action came back into that structure, and we have been witnessing buy pressure around this area in the last 3 to 4 weeks now. And if we take a technical dissection of the structure that price action evolved into within that channel, you will see that we have an inverse head and shoulder pattern. We have the left shoulder, the head, and then we have the right shoulder here with a neckline at the 1,845. Now, that is where the importance of the 1,845 came in yesterday, as it serves as the neckline of that reversal pattern here. Then we saw the breakout of the neckline area during the course of last week's trading session to further confirm that the reversal pattern might be valid. Now, with the situation of things right now, I told you yesterday that if we join the sell momentum yesterday, that we want to be moving our stop loss accordingly as soon as price gets into the 1,845 level, as if buy pressure resumes there, we might likely be seeing another wave of bullish momentum. And if it so happens that price action breaks down that structure, we shall be getting ready to join a decline, as price action will definitely be below the bearish trend line that we identified earlier. As you can see, that's the bearish trend line here. So we were at a critical point yesterday if price action comes into the 1,845. Now, when we scale down to the 1 hour time frame, we want to see how participant in this market has been reacting to that 1,845 level. Now, look at the situation we have here. Let me zoom in so that we can see things more clearly. So as soon as price got into the 1,845 level here during the early hours of today, we saw sharp rejection. We saw buy pressure here, taking us out of the sell position that we had yesterday. And we had a situation where price came back up into the 1,848 level. Now, at this morning, I shared this on my public platform. We had a buy position triggered here, and it appears that price action has broken down that neckline area at the 1,845, and this might likely negate any bullish momentum in this market. Now, for those who are taking advantage of this move here, well done to you for being on standby to catch that move. Let's see how far this bearish move is going to go. Now, in order to make things a little bit simple for us to be able to maintain our trading activity on a clear note for today, I want us to be connecting the series of lower highs here. As you can see, since the beginning of this week, price action has been bearish. So we want to be connecting the series of lower highs here. So I will rather use this one, after which I will be doing some readjustments when we bring back our candle chart back on the screen. Okay, so let's see how I'm going to use this. We are going to see which one we are going to be using. So let's bring back our candle chart. Beautiful. So we have something like this to guide our trading activity for today. So we have let's bolden this a little bit so that it would emphasize the importance of this current trend line here. So as you can see, since the beginning of the week, price action has continued to respect that trend line, finding uniform lower heights, and we have a bearish trend line figured out now. So now with the breakdown of the 1845 level, this further confirms the strength of the sellers at this particular point in time. So we want to see, okay, for those who are taking advantage of this, kudos to you. You want to have your stop loss somewhere right above the trend line here to give some room for price action to breed. And there's still a tendency that we might see a situation where price will come back to do a retest of structure. It could be the retest of the 1845 or the retest of the 1848 level, which also shares a confluence with that bearish trend line to incite another wave of bearish momentum to the downside. So what this simply means is that for those who had missed out on this bearish opportunity that broke down the 1845 level, let's remain patient, as we might likely see price action do a retracement. So we don't know how far the retracement is going to go. Is it going to go into the 1845 before another wave of bearish momentum happens, or will it go into the 1848 level, which shares a confluence with the bearish trend line, before another wave of bearish momentum happens? But one thing we are going to be looking forward to confirm that the retracement has culminated at any structure is to look out for selling pressure. So when you scale down to your lower time frame, you start seeing price action rejecting a structure, probably evolving into a reversal pattern, then we want to be joining that decline to the downside. And if it happens around here, then we want to be joining as well to the downside. So let's this bearish trend line be our yardstick for trading activity for today. So the bearish trend line here and the $1,848.50 level will be our yardstick for trading activity for today. Now, if price continues to trade below the structure, we shall feel comfortable in our sell position. Now, if price action takes us out of our sell position in such a way that it breaks out of both the trend line and the $1,848.50 level, then this will be a beautiful signal that buyers are gradually coming in. And remember that we have the neckline of our reversal pattern on the 4 hours time frame here, which means if buy pressure resumes above that structure, we will be getting ready to join a bullish momentum here. So to further confirm that bullish momentum, we want to see price action break out of the $1,848.50 level, breaking above the bearish trend line as well, to give us a confirmation of a bullish momentum. And if we are lucky enough, we start seeing some liquidity around this area, which will be reflected on the chart as buy pressure above the 1,848, will definitely be another opportunity for us to add more position to our existing trade. So these are my views here on the XAUUSD for today. I hope you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. And if you have any questions regarding what I've just explained so far, feel free to drop your inquiries in the comment section as I move on to the next pair for today. So the next pair we are going to be looking at for today, which will definitely be the last pair that we are going to be trading for today, and that is the USDJPY. Now on the USDJPY, we had the situation here. In fact, price has been quite choppy since the beginning of the week, as the indecision phase in this market becomes more emphatic. as participants are anticipating this event coming up today, and we really don't have an headway yet on where price is likely going to be going. However, we had a channel identified at the beginning of the week which was sitting between the 136.00 level, which appeared to be the resistance point for the week, and the 135.800 area, which happened to be the support level. Now, yesterday we saw the breakdown of the support line of the channel here, and one thing we noticed when we took a technical dissection of that structure is the fact that we saw a reversal pattern within this area in the form of a double bottom structure. We saw the first touch at the 135.370. We saw the second touch at the 135.520 as price action was unable to break the previous low, as you can see here, which was a simple signal that we might be bullish in this one. So we had a double bottom structure here, and that was a sign from a technical standpoint that is a beautiful signal that we're likely going bullish. And now whenever we have a reversal pattern like this, you all know what we look out for. We identify a neckline which shall be the basis for our trading opportunity. Now with the neckline coincidentally sitting at the 135.800, we were ready to join a bullish momentum in that regard. Now we saw the breakout of that structure here yesterday. Price action broke out, in fact did a couple of rejection of this level to further confirm that a bullish momentum is valid here, and we were able to join that bullish momentum here, and in fact price action moved about 30 pips thereabout before another wave of selling pressure resumed in this market. And look at what has been happening around the 136.00 area. You can see how that level is characterized by a lot of selling pressure in that market. Though I had some selling opportunity this morning again after citing the sell pressure below the 135.800 level, but it's a very risky position. Like I told you yesterday, that if price action breaks down and comes below the bearish trend line, as soon as price action moves in our favor, we want to be moving our stop loss to secure any sell position here. Why have I said that any sell position below the 135.800 is risky? And why have I said that we should be moving our stop loss accordingly? I will be showing you that in a moment. So in order to see this, we want to scale up into the 4 hours time frame. So on the 4 hours time frame, this is what we saw on the 4 hours time frame. Hold on a second, let's quickly run through the 4 hours time frame here. Despite we are on a bullish momentum here, remember we had a bullish ascending channel. Now let me zoom into that current structure here. Now look at what has been happening in the last couple of weeks on the USDJPY. You will see that we have a strong demand zone around the 135.800 and the 135.300 area. Now look at what has been happening around. If you take a look at that area, you will see sharp rejection of this area, which further emphasizes the strength of the buyers within this area. The same thing also happened during the early hours of today. We saw another sharp rejection of that structure, which further emphasized the strength of the buyers here. So selling above a strong fat demand zone here doesn't seem quite reasonable, and that is why I said it's quite risky selling above that area. So selling there, if you sold there, you want to ensure that you move your stop loss accordingly to secure the position, just in case price does not take you out of that position in a loss. We only want to be seeing a significant breakdown of the 135.300 level to give us that clue that sellers are likely strong in this market. If this does not happen, it doesn't look reasonable to be selling above that area. So right now we shall be scaling back into the 1 hour time frame, since we all understand now the importance of this structure around the 135.800, sorry. Now back into the 1 hour time frame and looking at the current structure here and looking at what has been happening since the beginning of the week, then definitely I would like to identify had another support line here, which would further buttress the strength of the buyers in this particular market, which falls around the 135.500 level. Let's label this area for the sake of clarity. So we have the 135.500, a very strong psychological level for that matter. bring back our candle chart. So we have something like this. Price was unable to break the previous low. As you can see, this is the lowest point price has ever been for this month, sorry, for this week rather. And we have a higher low here, and you all know if price is unable to break a previous low, we now have a higher low, which is a beautiful sign that bullish momentum is gradually coming in this market, obviously. Now, are we joining that bullish momentum right away? No, we are not joining right away, because we have a structure at the 136.00 level, which has been negating all bullish attempts in this market. Now, for us to buy the USDJPY, we want to see an outright breakout of the 136.00 level, price action taking out all the sell position around the 136.00 area, and as you can see, price action will definitely be right above that bearish trend line, which has been holding selling pressure since last week, and at this point this will be a beautiful signal to go bullish on the USDJPY. And if we are lucky, price action comes back to do a retest of structure, finding bullish momentum, buying pressure above that area, it will be another opportunity to add more position to our existing trade. So going into the New York session today, we have two structures that will be guiding our trading activity. The first one, most importantly, is the 136.00 level, where we need a breakout of that structure to confirm a bullish momentum in this market. Then, in addition to the breakout of the 136.00 level, is this trend line that we have here. As you can see, this trend line has been respected since the beginning of this week, and if we scale up into the 4 hours time frame, you will see the importance of that bullish trend line. Let me show you quickly. I shared this on the live session yesterday, and okay, look at this. Look at the ascending channel we identified at the beginning of the week, and I told you that we have a couple of trend lines within the ascending channel which demarcates the upper part of the ascending channel from the lower part. And right now, price action is currently trading around this trend line here, which further emphasizes the critical nature of this current structure. So like I said, this trend line will also be our yardstick for trading activity for this week, coupled with the 136.00 area. So going back into the 1 hour time frame, you can see how that's the trend line here, that is it here. So we want to see price action trade above this trend line and the 136.00 level to be comfortable in a buy position on the USDJPY. Selling the USDJPY in this market will not be valid unless price action takes out all the buy position within the structure. So please take note of this, munch my screen, and so that you can use it as a reference point when you're about to make your individual decision. It's on this note I want to be calling it a day, and I'm already out of time. I'm sorry, I won't be taking the Tesla. Next time, try to join us on Monday morning so that you can include a Tesla in our plans for the week. And remember, whatever we choose on Monday will be the basis of our monitoring throughout the week. For those who are not part of the live session, the beginning of the live session, let's quickly do a recap of what we talked about today before we drop the curtain for today. So the first commodity we talked about today is the US oil, and on the US oil we had the situation running where we have a profitable position running anyways, as we were able to buy at the breakout of that resistance point we identified at the $79.40 level. Do you remember we had a resistance level at the $79.40, and we had our buy stop above that structure. So we had our first position triggered at the breakout of that structure. We had our second position triggered at the breakout of the $80 level. So we have two positions running currently in this market, and I've told you to move your stop loss to secure this current position by moving your stop loss to somewhere right around the $80 level, or probably above the $80 level, to secure this current position. Now, the next thing we did here is to identify how to trade the US oil for today, and we were able to identify two structures. And the first one is the bullish trend line. After connecting the series of higher lows here, we have a bullish trend line which we said will be guiding our trading activity. And what this simply means, if price action continues to trade above the bullish trend line, we shall feel comfortable in our buy position. So for those who had missed out on both of these opportunity here, we said we want to be buying, doing a continuation above the $81 level. So a buy stop order is already sitting above the resistance point here for our buy position on this one. So for those who are already in this trade, this will be your third position. And for those who are not yet in this trade, this will be your first position at the breakout of the $81 level. Now, I said since the bullish trend line is our yardstick for trading activity for this week, if a breakdown of the bullish trend line happens, then we might likely be getting ready for a momentum shift. So what am I simply saying here? A breakdown of the bullish trend line will give us a clue that sellers are gradually coming in. But remember, we are not getting too excited. We want to remain patient for further confirmations to happen. Remember, we are still bullish on this one, and a breakdown may not likely be a bearish momentum anyways. It could be a false breakdown. So we need a further confirmation to happen, which is likely going to come in the form of a retest of the $80 level or the bullish trend line here. And if we start seeing certain pressure below the structure on our lower time frame, then definitely we want to be having our sell stop order below the $80 level to join that decline to the downside. So the only time we are going to be selling is a breakdown retest of the structure to the downside, but I doubt if that is going to be happening. But if it happens, we want to be on standby to catch that move. So we moved on to talk about the US tech, and on the US tech we were able to identify it is quite an ambiguous structure we have identified on the US tech here. And remember, we were part of this bullish momentum that happened yesterday. In fact, we had two positions before we were taken out of all these positions here. Now, with the selling pressure we saw here since the beginning of the week, we saw selling pressure resume here. We have an engulfing candle, and we were able to identify a reversal pattern following this impulsive move to the downside in the form of a double bottom structure. We had the neckline of that reversal pattern coincidentally shares a confluence with the resistance point we identified at the beginning of the week, which is sitting at the 12,350. And I told you that we want to be buying only. We are not having a buy stop order yet. We want to see price action break out. We scale down to our lower time frame. We want to see signs of retest of the structure, buying pressure above that level. Price could even drop as far as this bullish trend line before that bullish momentum happens. So we want to see a retest of structure before we join the rally to the upside. And if that happens, a further breakout of the 12,400 level will definitely welcome additional position to our existing trade. Now, in as much as we look out for buying opportunity here, I told you that we might likely be seeing a selling opportunity. And I showed you something on the daily time frame where we identified a double top structure, and we had a neckline at around the 12,300 level where we said, can I show you that? I'm just running out of time trying to make sure I run through this before. Okay, so this is the daily time frame here. This is what we saw in the daily time frame. We had a double top structure, a beautiful reversal pattern there, have a neckline around the 12,300, which also shares a beautiful confluence with the bullish trend line that has been supporting bullish momentum since the beginning of this year. And you all know from a technical standpoint, whenever we have a breakdown of the neckline, we expect at one point in time, price will come back to do a retest of that structure to incite another wave of bearish momentum. However, as you can see, price action is back into the neckline area at the 12,300, and the candle that closed yesterday closed in the form of a shooting star candle, which from a technical standpoint is a strong sign that sellers are still very strong in this market. So like I said if price action drops below the 12,300 with selling pressure below the structure on our lower time frame, it will be a beautiful opportunity to join that decline to the downside. So this is the basis upon which I have identified the structure on our 1 hour time frame. So I'm back at the 1 hour time frame, and if we zoom out here, taking into consideration this impulsive move to the upside, you will see that as soon as price got into the area between the $12,350 and the $12,400 level, we begin to see something that looks more like a reversal pattern in the form of a head and shoulder pattern, where the bullish trend line that has been serving bullish momentum for this week is serving as the neckline of that reversal pattern. So for us to join a sell momentum here, we will definitely want to be seeing price action breaking down the neckline, which also shares a beautiful confluence with that $12,315 level. So we want to see something like this for us to be selling the US tech for this week. If that does not happen and price action remains above the 12,350, then we remain bullish on this one. So let's keep this in mind to join a sell momentum in this market. Then we went on to talk about the GBPUSD, and on the GBPUSD we have a flat channel. We have a consolidation phase since the beginning of the week. Price has been very choppy since the beginning of this week, as we saw a situation where price continued to range within the 1.20500 level and the 1.200 level. And with the situation we have here, we saw the breakdown of this trend line, which triggered our sell position. I've told you to move your stop loss accordingly to secure this current position, as we might still have this situation happen where price will come back, retest the structure before the breakdown of the 1.200 level will happen. In as much as we continue to look out for this selling pressure to happen, we should not ignore the possibilities of buyers coming in this market. And considering the fact that we have been seeing buy pressure from the 1.200 level since last week, there is a likelihood that buyers will come in this market. But we are not going to be buying unless we have a breakout of the 1.20500 level. And the reason why we are going to be looking out for buying opportunity above the 1.20500 level is we need a beautiful confirmation to join that rally to the upside. We want to see price action take out all the sell position around the 1.20500 level by breaking out of that structure. And if we are lucky enough, we start seeing buy pressure, which is a sign that there is enough liquidity in this market right above that level to add more position to our existing trade. So these are my views on the GBPUSD. So I hope that we'll be on standby to catch either of these opportunities. Then we went on to talk about the XAUUSD, which appears to be dropping to the downside right now. And we already have a structure which we shall be using to guide trading activity for today. And one of the structure is the bearish trend line here. After we connected the series of lower highs, we have this beautiful bearish trend line figured out. Then the second structure we are going to be using is the $1,848.50 level. And what do I mean by this? How are we going to be using the structures? Well, I have said that if price action continue to stay below the $1,848.50 level, we want to feel comfortable in our sell position. And this as well will also guide us in placing our stop loss in the most appropriate area. So what this simply means, price action trading below the $1,848.50 level, we remain comfortable in the sell position that we are in right now. And now, like I said, for those who had missed out on this breakdown of structure, you want to remain patient, as there is a likelihood that price action could do some retracement back into structure before another wave of bearish momentum will happen. So we are looking at probably price action coming back into the $1,845 level before another wave of selling pressure comes in, or we are looking forward to price coming back into the 1,848 area, which also shares a confluence with the bearish trend line to inside the bearish continuation to the downside. However, if price action breaks out of the $1,848.50 level, taking out all the sell positions there and also breaching this bearish trend line, then this will be a signal that the trend line may no longer have the capacity to continue to hold selling pressure. And as a result of that, we want to be having a buy stop order right above that structure to trigger that position. And if we are lucky enough, we see some liquidity around here in the form of buying pressure on our lower time frame to add more position to our existing trade. So these are my views here on the XAUUSD. I wish you best of luck on that one. Then went on to close the day with the USDJPY, which I told you how important price action is currently trading above a strong demand zone here. And as long as price remain above this demand zone, we have no choice than to continue to look out for buy opportunity. And as a result of this, we have our buy stop orders sitting above the 136.00 area, an area which has been a strong selling niche for participants in this market since the beginning of the week. We want to be seeing a takeout of that structure to give us a confirmation that buyers have come to stay in this market. So let's be on standby for that one, just in case a bullish momentum comes in. However, if the sell pressure here continues in such a way that price action continue to find lower lows here, I would want to see price action take out the buy positions within the 135.00 level and the 135.300 area for selling opportunities to happen in this market. So it's on this note I will be calling it a day here, and it has been a wonderful moment with you guys. I really appreciate your attention till this present moment. And for those who are joining us for the first time, you are also welcome on board. I hope you are able to grab some information here and you are well equipped against the New York session to be able to take your individual and independently take your own personal decision on all of the pairs that we talked about today. And please remember, we have a macroeconomic event coming up in 3 hours from now. The Fed chairman is going to be testifying in front of the Congress, doing his monetary policy report. So we want to be looking forward to that event as well. So ensure you move your stop loss accordingly on all your positions. Secure your current position, as we might likely be seeing some volatility in the market prior and post the event. On this note, I wish you best of luck today. Thank you, everyone. I see your comment, my Gigi. Thank you. I see your comments too. Who's that again? I saw someone now. All right, I see your comments, KMJ 603, K Demificent. I'm sorry, I wouldn't be taking Tesla. Try to introduce Tesla to us on Monday, and I will definitely include it into our plans for the week. All right, so thank you very much, everyone. On this note, I wish you best of luck today, and hoping to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs we have been monitoring so far has been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.